And welcome everyone to another Smart Money Circle episode. I'm Adam Sarhan. With me today is Phil Palumbo, who's the CEO and CIO of Palumbo Wealth Management with approximately 650 million in assets under management. Phil, thank you so much for taking the time and welcome to the Smart Money Circle.
Thanks for having me. I'd appreciate it.
So, Phil, I always like to begin. Can you please tell us your story and how you got to where you are today?
Yeah, so essentially, one of the things that I really was intrigued about this business is as I thought about people's lives, the three most important thing, which I talk about in my book for all of us, and I equated to a three-legged stool where the first leg is your health. So if we all have our health, then we could enjoy our family, which is the second leg of the stool. And in order to enjoy your family, you sort of need to have money, as I always say, right? So which is the third leg of the stool. So if we mismanage any one of those three, as you can imagine, the stool would fall over. So the idea that I was part of those three most important parts of people's lives, for me, that was just so fascinating in so many ways. And that's really what prompted me to get into this business from the beginning. And plus I came from a background where my dad was a local three electrician, so he was a blue collar worker, a really hardworking guy, working overtime after work. Mom stayed home, take care of my older brother, Anthony, younger sister, Rosa and it was and we grew up in a middle class environment. And so when it came to understanding work ethic, that's something that I was raised on, literally. So at the age of 13, I would go to school, I would participate in a sport, and then after sport I would go to work until 10, 11, sometimes 12, 1 o'clock in the morning. And then in college, where I played Division One lacrosse, I would go to school, I'd play lacrosse, and I would go to work, same exact thing all through college. So that level of work ethic, it taught me a lot. And the type of clients that I serve are a lot of individuals and families that really have worked hard throughout their lives. They're founders of businesses predominantly. And when they were ready to officially stop working, they would come to me. And when I looked at that and I thought about how hard they worked to get to where they are today, and I look back and I thought about it like they can't afford to be down 50% because they can't go back and repeat what they were just
Right.
doing.
Right.
So besides the idea of like having the opportunity to manage an important part of their life, and it's that part as well, to really assist people making sure that they maintain their lifestyle and not run out of money. And it's a big undertaking and it's a great responsibility. And that's really what excites me about, what I do on a day-to-day basis.
Wow, I love that. What a great story. And I love that holistic side of it too, where you're looking at not just the money, but the family, the health, and then the money as well. So let's
Yes.
talk about your business. Please tell us about what you do and your investment strategy.
Yeah, so as far as my business, so I was at the major wirehouses for 20 years at the major Wall Street firms, and I launched my own firm just about 5 years ago. Main goal that I had was just to really truly be a fiduciary to my clients and not have any of these conflicts that were inherent with these larger firms, where meaning that there were times when management sat me down and said, "Why don't you sell a client this product or sell a client that product?" And that really always turned me off. I was always a fee-based financial advisor, and we did financial planning for my clients and investments, and that's all I wanted to worry about and nothing else. So that's what prompted me to leave the major firms, launch my own independent firm. And so my clients truly know that everything that I'm helping them with is for them, not for any other conflicted reason or pay to play type model. So the first part is to be a true fiduciary, and that's what we're about. In terms of how I service my clients, it's really all about starting with understanding their vision for their life for the rest of their life, and number one. And number two is, what does that lifestyle cost? And then what point can we make work optional, right? So I use this word make work optional, which is my book's all about. And that basically means you working on because you want to, not because you have to. So as a firm, we go through all of those scenarios and processes through financial planning to really help my clients understand what point will they make work optional. And in addition to that, we help our client with exit planning. So when we sit down with clients who own a business, we really want to understand, where's your company trading at today from a multiple standpoint? And is it trading at what we call best in class? So best in class is, let's say, Adam, you have a business that's trading at 4 times EBITDA, but your competitors are trading at 9 times. Well, why are you at 4 times, and what do we need to get you to 9 times? And that creates significant wealth when you implement that correctly. And that's all part of the whole work optional experience. So that's the planning piece. The investment piece is, I'm a disciple of Warren Buffett and Charlie Munger. So their thought process of owning really great businesses that have large economic moats with great management, consistent earnings, lots of free cash flow, low debt. and a strong competitive advantage is how we look at investing. And we're not looking to own 50 or 100 investments. We're looking to keep it concentrated with businesses that we know and understand and are simple. And that's kind of the core of how we manage money. And then around that, we will use alternative investments such as private equity, private real estate, private credit, hedged strategies, and then fixed income. We try to keep fixed income as low as possible because it's a terrible performing asset class over long periods of time when you factor in inflation and taxes. And so basically, that's the construct of the portfolio, which is predicated on the client's risk.
Wow, I love that. So not only do you look at undervalued stocks, the Warren Buffett Munger type approach, but you also sprinkle in some alternative investments as well, which is
Yeah.
what big endowments do. So, okay, I love that. All right, next question for you. How do you handle risk, and what are some mistakes you see people make with respect to risk management?
The biggest risk, so here's how I explain risk. So there are two parts to risk, and I explain it like this. So you got volatility risk here, and you got inflation risk, right? So volatility risk, I always explain, is short-term in nature, but inflation risk is both short-term and more importantly, it's long-term. So a lot of investors are worried about this volatility risk here, which really is doesn't mean anything unless you sell at the bottom. I'll just tell you a quick story because it's important.
Please
So I
do.
remember a story of my grandfather. We're sitting at the dinner table. So I grew up Italian. We used to eat at 1 o'clock on a Sunday. And my grandfather and grandmother, my grandmother used to say to my grandfather, you know, Philly, my account is down, with $30,000. What's going on? And he would always say to her, Millie, if you don't sell, you didn't lose anything. And that's such an
That's
important point because that volatility is that exactly. Volatility it's just volatility and a fluctuation in your account, but it doesn't mean anything as long as you don't make a stupid mistake and sell at the bottom, right? So the key thing but that's why you have to embrace volatility because the more you embrace volatility, the more you'll get ahead of inflation with your wealth, which means that you won't run out of money and you'll be able to maintain your lifestyle. So that's how we look and think about risk.
I love that. So there's two sides of it. The volatility side, I mean, the stocks go up and down. Let's just, to use plain English.
Or any
And then for
investment. Yep.
yeah, the investments, right, correct. Very good point, by the way. Any of the investments go up and down. And then the inflation risk is we know that inflation over time is going up. So the cost of $1 erodes over time. So what are you doing with that money to make sure your investments outpace inflation? I love that. Okay. You mentioned,
One key point I want to make just in addition to that.
please, Phil, yeah.
So, but what I try to educate people on is that if you want to keep your volatility low, well, that means that over time you're gonna have an inflation risk problem. What I mean by that is that if your volatility is low, that means you have a lot of fixed income. And fixed income is a terrible performing investment over long periods of time when you factor in inflation and you factor in taxes. So investors really have to understand that. Like, I get it. You don't want to feel the volatility because you're emotional about investing, but that's why you hire an advisor who will
Right.
coach you through that and help you through that emotion. Really
I love it.
super important.
And that is a brilliant point. So you mentioned the book. Can you please show us your book and tell us a little about it? Because I love
Yeah.
when people books.
Right. So make work optional, right?
Love it.
Chief financial peace of mind. So the idea, so why how I came up with that title, and I really feel like the word retirement is so archaic, right? It's just archaic. We live in modern times. People are living longer today than ever if you take care of yourself and you do all the right things. And a lot of my clients today, they're not fully retiring. Like my father, it's different. He stopped working at 53 years old, thankfully, because he had good advisors who saved up enough money, invested properly, and and so he was climbing ladders and doing a lot of hard labor that he didn't want to do anymore, and he had back issues, and that's why he officially retired. But others that are not in that type of business, they're stopped working, but they're working part-time, doing some consulting, so the idea behind make work optional is everybody should strive to get to the point where work is optional for you. And I define that as, like I said before, you work on your terms, not on somebody else's terms. It means you're financially independent. It's how you win the ultimate game of money. So you win the ultimate game of money by being financially independent, where you can do whatever it is that you want to do. Munger says it all the time that he wanted to be filthy rich, not to drive three or four Ferraris or Lamborghinis. It was so he could be financially independent. And people have to grasp that concept where most people are like, I want to retire at 65, 66, because my aunt did, my cousin did, my brother did. And they don't really have a game plan of why they're even thinking about 65. Well, what about 55? What about 52? Right? Or at least have the point, get to the point where you're financially independent. So that's what the entire book is about.
I love that. So, okay, I'm definitely going to read that. Let's talk about the next question. Pivot a little bit away from the actual business, go to the timeless advice, which is my favorite part of the show. What are some timeless lessons that you've learned along the way in business and markets and life, anywhere you want to go, please, that you'd like to share with the audience?
Yeah. So timeless as it relates to investing is really to be emotionless. You got to be like a Navy SEAL as it relates to investing, right? When you take the emotions out of investing and you understand that if you have volatility, if you have extreme volatility, that is an incredible opportunity to invest capital that when things recover over time, you'll do very, very well. The one thing that is timeless as well is that people have to understand like this country is the greatest country in the world, the most innovative, creative, smart entrepreneurs versus any other country in the world. And if you look at the companies today like Google and Microsoft, right, Nvidia, Costco, Waste Management, and we have some of the greatest companies in the world relative to other countries and one of the richest countries in the world. And that's for a reason, because of the diversity. We have a diverse group of people that could be entrepreneurs and really build something huge that can make a big difference for either the country as a company or even themselves and their families. So never doubt the American economy, which is something Buffett talked about all the time. And the reason why I say that is because when you do get that volatility, it is that opportunity to take advantage of it. Many times you don't see the light at the end of the tunnel. Like COVID's a perfect example. Like no one knew how that was going to unfold, but fortunately, we actually were up that year in 2020 as far as the stock market's return. A
Right.
lot of people don't know that, right?
Yep.
So we figure things out, and that's really important as it relates to investing.
Got it. I love that. So let's talk about the other side of the coin, timeless mistakes. What are some timeless mistakes you've seen people make, you've made, and how do you avoid them slash learn from them?
Yeah. It really goes back to emotion. It's like everybody's buying high and selling, buying high and selling at a low point, right? So where the key trick to investing is buy low and sell high, right? So it's and that's a really important point to make and a big mistake that a lot of people make. The second biggest mistake is following the herd, right? When everybody's saying one thing, do the opposite. So I give an example of that. So many investors going into when Trump won in back in November the election, right? Everybody was excited about it, pro growth, M&A, including me. And so one thing I told my team, I said, guys, it's everybody's so optimistic. Markets are trading at all-time highs, forward multiples 22, 23 times. What if the opposite happens, where we just don't get that? And here we are
Right.
with all this volatility.
Right.
So as an investor, you always got to be you have to take a step back and say, okay, what's going on? What's everybody saying? And kind of look at the opposite, go in places where people are not going. And that's
Right.
where a really great way that you can make money as well.
I love that. So it's almost like avoid the herd or the crowd mentality and stay away from that type of behavior is what you're saying. And of
Yeah,
course, be emotional, not emotional. I love it. Okay, perfect. So by the way, a side note, I wrote a book too, and the whole idea there is to teach people how to make rational, not emotional decisions. So everything you're saying, we're
love it.
very much aligned. Yeah, I
Yeah,
love it.
yeah.
Okay, perfect. So next question for you, Phil. Let's talk about leadership. What makes a great leader, and what are some lessons you've learned along the way about leadership?
Yeah, being a great leader is doing things that average people don't want to do by far, right? It's shaking up the norm. That's being a leader. It's taking on risks, that make you nervous. It's like, the invisible bridge in that movie. Um, Help me out here. Anyway, so it's in that movie, which I don't recall, but he said, believe me, just take that step, and there's the invisible bridge there, and he takes that step, and the bridge was there. So oftentimes you just have to just take on risks, and part of being a leader is doing that. It's being a leader. I do believe it's having tremendous grit and working harder than everybody else around you. Oftentimes people see successful people and they think it's easy that and how that person got to where they got. But the reality is that they never were with them when they got in the office at 6 a.m. and left at 11, 12 o'clock at night. And again, did things that average people don't do. When you do things that average people don't do, then that's really how you get ahead. And again, you can't be afraid to shake up the norm. That's really how you become a leader. It's easy to become a follower. It's easy to be a follower, but it's
Yeah.
much more difficult to be a leader.
I love that. So are you talking about the movie Onward? Is that the movie you're talking about with the Invisible Bridge?
No,
Or... Okay, we'll
Raiders of the Lost Ark.
okay. Yeah, Indiana Jones. Okay, wonderful. Leap of faith. Got it. Okay. So let's talk about after leadership, adversity. Great leaders and great businesses, and you've been around the big wirehouses. Now you're independent.
Yeah.
You've helped clients with exits. You overcome adversity. How do you handle adversity? What are some obstacles you overcome along the way, please?
Mhm. The way you overcome adversity is know that adversity will happen at some point in your life. And when adversity happens, you just got to program your mind. Okay, well, you know, Bill Ackman just said something really interesting. So Bill Ackman went through a terrible divorce, and he was on top of the world prior to that, and monetarily speaking, and just in general.
Yeah.
And what he said is that, when he came down that peak on the mountain, he said what's important is don't look back at the prior peak, just look forward and slowly climb back up that mountain to get back to peak. And I think that's really important. We're all going to face adversity, whatever that means. And you just got to really just hope and pray that you just fight through it, you do what you have to do, and never let anything get you down. Just get up and keep moving forward. Stallone talked about it in Rocky Five, when he's talking to his son in the movie. You're going to get knocked down, but those who get up and keep moving forward are the strongest. It's part of life. Life is not like the stock. It's like the stock market, right? The stock market over time goes up, but you go through these periods of volatility, and that's like our personal lives, right? Whether it's personal or business or whatever it may be. You just got to keep fighting through. You got to be strong. You got to be tough and just keep fighting through.
Yeah, I love that. Okay, wonderful. So, final question for you today, Phil. What is the best piece of advice you'd like to give the audience or your 30-year-old self?
Yeah. To dream big, right? Dream big. And there's no other way to go through life but to have a big dream and go for it. I really believe that we get one shot at this life. And if you're going to get one shot at this life, make it the very best life that you can make based on the cards that you dealt, right? I have certain qualities that God gave me, and my job is to maximize those qualities, right? My qualities may not be as good as somebody else, but for what I have and the cards that I've been dealt, I feel like I'm doing the very best to maximize that, to create the best life I can possibly create. I can't imagine going through life in any other way, you know, but everybody's different. Other people are okay with a more low-key life, whatever that means, right? Whatever makes you happy when you wake up, that's the most important thing. I always say to people, how do you feel when you wake up? Do you feel great about things? If you feel great about things, then you're doing the right things in life. If you don't, then you got to make some type of changes. So the key thing is in life is dream big and really just go for it. That's really important.
I love it. Find your bliss. Well, beautiful. Phil, thank you so much for taking the time. This has been absolutely fantastic. Congrats on the success. Congrats on going
Thank
independent.
you. Thank
We'll
you.
hopefully have you on again soon.
Thanks a lot, Adam. Good to meet you, and thanks for having me on.
Likewise.